Tensions in West Asia continue to escalate. United States President Trump reinstates blockade on the Strait of Hormuz, labeling the U.S. guardian angel of the waterway and demanded foreign financial reimbursement. Global crude oil prices see a sharp spike after Trump reinstates the Strait of Hormuz blockade on Iranian ships. Brent rises over 4.5% to $79 per barrel levels. Meanwhile, all three benchmark indices trade in red as investors digest the last developments from West Asia. Now, Asian Paints announces a steep 12% price hike as the ongoing conflict in West Asia pushes up the cost of crude oil-linked raw materials, putting pressure on the company's margins. Chairman R. Sheshasai says price hike will help mitigate the inflationary headwinds. Retail inflation in June comes in hotter than expected at 18-month high of 4.38%, breaching RBI's medium-term target of 4%. Food inflation rose to 5.32% versus 4.78% in May. Sharp uptick seen in transport inflation coming in at 4.31% versus 1.75% in the month before. Benchmarks managed to shrug off early weakness to end the session on a flat note with positive bias. IT emerges as the top sectoral gainer, while FMCG and metal saw some bit of selling pressure. HCL Tech doubles down on data center business. The tech major announces investments to the tune of 3,500 crore in data center business as it expects global data center demand to triple by 2030. The company also reports inline set of numbers for the first quarter, with PAT rising a little over 3% on a sequential basis, while revenue in dollar terms falls slightly to $3.65 billion. Welcome to Business at 9. I'm Shibani Gharat. Now, the West Asia tensions are escalating further. U.S. President Donald Trump has announced on Truth Social that Iranian blockade is back. He has said that Hormuz is open and will remain open to without Iran. He has also said that the blockade only applies to Iranian ships or customers, while countries will have fails and open use of strait. He said that he's called U.S. the guardian angel of the Hormuz Strait. Soon after this post, Brent crude and WTI oil jumped above 4%. The impact of the Trump's comments and the West Asia tension are also visible on the Wall Street. The broader market index lost 0.4%, while the Nasdaq Composite was down 1%. The Dow Jones Industrial Average traded down 56 points or 0.1%. S&P 500 dropped to a session low. Now, to discuss, the latest on the West Asia crisis, we are now joined in by Arnab Das. He is a global market expert and strategist, and he's joining us from London. Thank you, Mr. Das, for joining us today on ET Now. It was just a week ago that we were discussing, the threat being issued by President Trump, and now he says that, he is going to, blockade the Strait of reinstate the blockade on the Strait of Hormuz yet again. What will be the immediate impact of this on, the oil prices going forward? Because there has been a 4% jump already seen today.
Yes, well, thanks for having me back. Look, I agree. I think this is, it's as you say, right? The price of oil is jumping, bond yields are rising, currencies are realigning somewhat, and equity markets are responding accordingly. So because at the margin, this is a bit more of a stagflationary hit, right? The price of oil up, driving inflation up, not so good for growth, not very severe, but still meaningful. I think it illustrates that, as we were discussing previously, The ceasefire is not very solid. Nothing has really been agreed, and both the U.S. and Iran are jockeying for control of the Strait of Hormuz. One of the interesting things is that President Trump is trying to charge for freedom of navigation, and that is, not something that the global hegemon should be doing, right? The global hegemon, one would expect, would be providing freedom of navigation as a kind of global public good or service. So I suspect that what he's trying to do here is make it clear that it's in everyone's interest for the U.S. To emerge on top in this contest of wills with Iran. But of course, I don't think anybody is really fooled by this. What's happening is that Iran has turned the strait into a bit of a chokehold, and if this is allowed to stand, it'll be a bit of a precedent for many other narrow passageways through international waters in the world as a whole. So I think the U.S. is going to continue to try to do what it can to put the genie back in the bottle. But it's going to be very difficult to get that done. In the end, there'll presumably have to be some kind of substantive negotiation, and I guess both sides will have to make some sorts of concessions in order to get a deal done. And if not, I suspect we'll continue to be facing this jockeying in the strait and some volatility in oil prices, bond yields, currencies, and indeed equity markets.
US can do what it can to put the genie back in the bottle, but is a blockade and this escalation, in the region the only way to put the genie back in the bottle, or there are other ways, which maybe US has tried and failed over the past, couple of months, and that can be again worked with?
Look, I think, the U.S. can resort to, a kind of all-out bombing campaign once again, but Iran has demonstrated that it can resist a bombing campaign and at the same time target ships in the strait and target the economic infrastructure and energy production facilities of U.S. allies in the Gulf, as well as U.S. bases. So I think that's why he's resorting once again to a blockade that targets Iran. I suppose in principle, the president could order a storming of Karg Island or some other such measure, as he's threatened in the past. But boots on the ground, I think, is a very strong commitment. Last time we were on together, we were discussing how the midterms impose a constraint on how far President Trump can go, and I think that applies very much to the idea of boots on the ground. So I think he'll continue to try and warp and weave and steer between these two narratives, right? One that Iran is in control, and the other that he's in control. And that, like I said, he'll be continuing to try to put the genie back in the bottle. One may hope he succeeds, but it's not going to be so easy.
Thus, will these sustained $100 plus barrel oil prices tip some of these, vulnerable economies like Europe and Asian economies into recession going forward in the months to come?
Listen, I think if we get, very high oil prices, I'm not sure that $100 would do it, but if we get significantly higher than that, then there'll clearly be significant demand destruction, as there was earlier in the year, particularly in Asia and perhaps in Europe as well. I think it's very interesting that we are, as you say, we're up 4.5% in a bit of a jump move since President Trump made this kind of announcement. But the level is still not that high. And I think, that is partly because China has been buying much less oil than expected, and reserves have been used to depress the spot price. So I think probably the worst will be avoided, and I think the market will continue to think that President Trump won't go all out again because of the midterms, right? So he won't launch a full-scale attack again. In all probability, he won't put boots on the ground, I think, is what market participants and oil traders in particular are thinking. And I sort of agree. Trump needs to try and regain control of the situation, but he'll be constrained in how far he can go because he doesn't want the price of oil and gasoline to go through the roof, and he doesn't want to put boots on the ground, lest that really affect things in the midterms. So I think we're going to be in this kind of range-bound kind of holding pattern with volatility in the markets, and with volatility in the news flow, not least coming from President Trump himself, as we approach the midterms. And maybe there'll be a more serious effort either at negotiation or at its opposite, right, hostilities after the midterms once again.
Right, right. Specifically, also, Trump has specifically mentioned, the Iranian ships and Iranian customers. So help us understand, will, the OPEC and OPEC Plus will be able to fill in the gap now at this point in time if, the Iranian oil exports drop to zero?
I think, the Iranian oil exports are not the big issue here. The big issue is what happens to the ships that are still there in the Strait, and to the production and export capacity of the Gulf countries. Iran makes a difference, but probably only at the margin. And I suspect that the price of oil fell so steeply because in the short term there was a bit of a glut, because all of a sudden the tankers that had been storing oil effectively stuck in the water in the Strait were coming back to the market, right? So we bounced from a level that was depressed by this kind of expectation of oversupply once the ceasefire took hold. Now I think the question is, if Trump succeeds in blockading Iran once again, can those ships get out of the market? Get out of the Strait and get their oil into the market? And I think the answer to that is sort of, perhaps not. It sort of really depends on how severe the blockade is and how much Iran is able and willing to retaliate, which could be quite substantial. But like I said, as we were discussing before, the midterms continue to impose a constraint, and that probably implies a range-bound oil price rather than the kind of surge to 100 or more.
Das, you also mentioned how the Strait of Hormuz has set the wrong precedent, and there are other narrow waterways, passageways, and the countries around it can also use them, like how Iran did, is what you mentioned. Now, will the world economies now look after this example of the Strait of Hormuz, when dealing with nations, or for supply chains and smoother navigation, some of these choke point deflections and larger routes, and what is the kind of impact it will have on insurance and shipping?
I think most of the other choke points in the world are not at direct risk of a kind of war premium. Some of them could face that, right? One could imagine Taiwan Strait, the Straits of Malacca, the Bosphorus, perhaps even. But I think we're not there yet. I think what's happening at the moment is that I suppose some governments are musing, some of them out loud, about the possibility. One will have seen reports that this has been mentioned in the case of Indonesia when it comes to the Straits of Malacca. I think there's going to be, if there's a direct effort to do such a thing in peacetime, there's going to be a lot of opprobrium, right? A lot of resistance to this, because it would be a violation of the international law of the sea, and the UN Convention on the Law of the Sea in particular. So I don't think we're going to see this precedent creating a wave of blockages and threats in various straits. But I think what it does suggest is that in extremis, if a country is threatened, or actually if there is a war or some other kind of issue like a blockade, we may get to see some more of this happening as the Iranian precedent sort of comes into the frame once again in other parts of the world.
Right.
And I think that's one of the reasons they're going to do everything they can to prevent this from being allowed to stand.
Right. Mr. Das, thank you so much for joining us today on ET Now yet again.
My pleasure. Thanks for having me.
Well, moving on, HCL Tech doubles down on data center business as it announces 3,500 crore investment in its data center business. During the post-earnings conference, MD and CEO C. Vijay Kumar said that the demand for global data center is expected to triple by 2030 and that the tech major is looking to strengthen India presence as the domestic opportunity stands at $20 billion. Talking about the quarterly results, HCL Tech reported steady set of numbers for the first quarter with all key metrics coming in line with the expectations. The tech major has also announced a dividend of 12 rupees per share. Now listen in to HCL Tech CEO and MD Vijay Kumar's statement on retail guidance and company's roadmap for AI data centers.
Retaining our FY27 guidance of 1 to 4% at a company level revenue growth and 1.5 to 4.5% for services, both in constant currency. Margin guidance is also retained at 17.5 to 18.5%. And for clarity, this guidance is for organic growth and does not include acquisitions, including the recently concluded the JasperSoft acquisition. Demand is set to nearly triple by 2030 thanks to AI. And in India, that growth is expected to happen at an even faster rate. Sovereign data requirements are increasingly mandating that workloads for governments, enterprises, and even global consumer platforms be delivered in country. The business is shifting from physical infrastructure to higher value AI-ready full stack solutions. One we believe will be a new growth vector for HCL Tech. We will combine our capabilities across AI data center design, DevOps and cloud operations, as well as our software portfolio with a new AI data center business for this. In this regard, we will make a strategic investment up to rupees 3,500 crores and with the potential to scale to 50 megawatt of capacity.
Now, India's largest paint company, Asian Paints, has announced a steep 12% hike in prices on the back of inflationary pressures caused by the West Asia war. At the annual general meeting, Chairman R. Sheshasai said that it may be time for input cost to normalize. My colleague Anurag Joshi is here with the details.
Asian Paints has hiked its prices by about 12%. The company's chairman, R. Sheshasai, said this at the annual general meeting. The recent escalation in West Asia has created significant inflationary pressures in raw materials and price pressures, particularly through crude oil linked inputs are there. Sheshasai said the implemented measured price increases of about 12% is to mitigate these headwinds. He said that the conscious price actions must be balanced with the need to protect underlying consumer demand, and the situation in West Asia remains fluid and it will take time for the input costs to return to normalcy, and the company will continue to adopt a balanced and responsible approach, passing on only such adjustment as are necessary.
Now, Supreme Court has ordered mediation to resolve the long-running inheritance dispute over the Kalyani family's ancestral wealth that is estimated at over 1 lakh crore rupees. Former Judge Justice L.N. Rao has been appointed as the sole mediator. Kuldeep gets us more details on this.
Well, the Supreme Court of India has pushed for an amicable resolution in Kalyani family dispute. In fact, the bench headed by Chief Justice of India, Justice Surya Kant, has ordered Justice L. Nageshwar Rao. In fact, the bench appointed Justice L. Nageshwar Rao as mediator in the matter between industrialist Baba Saheb Neelkant Kalyani and his sister Sugandha Hiramat. The matter involves ancestral wealth and promoter stakes in listed companies with the total value estimated at over 1 lakh crore rupees. Now, the bench has requested the counsels appearing for both the parties to contact Justice L. Nageshwar Rao today itself so that the mediation proceedings could be started by tomorrow. But the Supreme Court has now posted this matter for hearing after 2 weeks.
Now, Finance Minister Nirmala Sitharaman reviewed the progress of the RBI's FCNR, ECB and OFCB swap schemes with public sector banks and financial institutions. Banks informed the Finance Minister that the schemes have received a strong response from NRIs, particularly from Singapore, Hong Kong, West Asia, the UK and the US. The Finance Minister also called for greater outreach to the Indian diaspora to sustain the momentum in foreign currency inflows. We have Prakash with more details on this.
Well, the Finance Minister has interacted with public sector banks and public finance institutions to review foreign currency, non-resident bank deposits, overseas foreign currency borrowings and external commercial borrowings. In fact, FM calls for enhanced NRI outreach initiatives. Public sector banks apprise the Finance Minister of the progress under the RBI's swap facility schemes. In fact, public sector banks informed about the initiatives which have been taken so far. In fact, there has been a strong interest under RBI's FCNRB, ECB and OFCB swap schemes. In fact, a stronger ECB mobilization has been projected in the Q3 of the current financial year. It was noted that these initiatives have received an encouraging response from the Indian diaspora, where banks are offering attractive returns, and there has been significant interest from NRIs residing in countries such as Singapore, Hong Kong, West Asia, of course, the United Kingdom, the US, and other overseas jurisdictions. You are aware of the fact that the scheme was announced by the RBI on June 5, wherein FCNRB deposits are eligible under the scheme until September 30, 2026, while ECBs and OFCBs are eligible until December 31, 2026.
Now, Prime Minister Narendra Modi is likely to chair a review meeting on the electronics sector. The meeting will assess the progress made in boosting India's electronic manufacturing ecosystem, with discussions expected on key reforms, fresh investments and measures to further enhance domestic production capacity. My colleague Prakash also gets us more details on that.
Well, that's an important development coming in, as we are learning that the Prime Minister will chair an important review meeting on the electronic sector this evening. Various aspects will be discussed with the concerned ministries and departments. In fact, sources tell us that the progress in the semiconductor sector also likely to be part of the deliberations, wherein reforms, investments and progress made in enhancing manufacturing capacity likely to be discussed. In fact, the Finance Minister, Nirmala Sitharaman, and the IT Minister, Mr. Ashwini Vaishnaw, will be part of the meeting. The review will focus on accelerating the next stage of the production-linked incentive scheme and India Semiconductor Mission 2.0. You are aware of the fact that the Expenditure Finance Committee under the Finance Ministry has already cleared a proposal worth rupees 1.25 lakh crore for ISM 2.0. Now, this meeting is very crucial at this point in time, and the Prime Minister is likely to provide necessary inputs. After these deliberations, in fact, the proposal will be put up before the Union Cabinet for approval. A very significant development coming in, and the Prime Minister will chair an important review meeting on the electronic sectors this evening.
Now, with Mumbai monsoon disrupting transportation, Western Railways is planning to lift tracks at Nalasopara station in multiple phases. Vineet Abhishek, the Public Relations Officer of the Western Railway, spoke exclusively to ET Now and explained how the operations are planned. Let's listen in.
After the last year monsoon, we lifted almost half feet track, almost 6 inches track of tracks up at Matunga Road station and at Vasai Road station area. However, this year we saw that there was waterlogging in Nalasopara area, and although our drains and everything was perfect, it was just that the city's water level was as high as the water level on our tracks, and that's why the water from our tracks and the station area could not get drained out. You need gradient, you need, the water needs to flow from one side to another. And that is the reason why there was waterlogging at Nalasopara station. What we have planned is that in multiple phases, we will be lifting our tracks. So in phase 1, there would be some portion of tracks which would be lifted, almost 200 mm track would be lifted. But overall, some tracks would be lifted by about 15 inches, depending on where and what is the level of tracks. And entire Vasai, Nalasopara, Virar area, we have identified locations where the tracks need to be lifted. Some of the tracks would be lifted in the coming weeks in phase 1. Some other activity would be done in phase 2, and some major activity would be done in phase 3. And we will try to ensure that much of the activity, much of the lifting work happens before the next monsoon.
Well, with that, it's a wrap on this edition of Business at 9. Goodbye from me, Shubhani Gharat, and the entire team of ET Now.